All right, let's get right into it. Today, we're going to take a deep dive into one of the biggest challenges for anyone new to the US financial system, building credit from scratch. We're going to pull back the curtain and really deconstruct how this whole thing works piece by piece.
And this right here is the heart of the problem. You know, you could have been a financial rock star back home, perfect payment history, the whole 9 yards. But when you land in the US, the system basically sees you as a ghost. That credit history you worked so hard for, it just doesn't come with you. And that creates this incredibly frustrating hurdle right out of the gate.
So here's our game plan. First, we'll tackle the main obstacle, what we're calling the systemic barrier. Then we'll get into the anatomy of a credit score, what actually goes into it. After that, we'll zero in on a key tool, the credit builder loan, before looking at some other options. And finally, we'll wrap up with the long-term strategy.
Okay, let's dive into this first part. The fundamental challenge for newcomers isn't about having bad credit, it's about having no credit. There's a name for it, credit invisibility. And this is such a crucial point to understand. Being credit invisible doesn't mean a lender sees you as a risk. It means they literally don't see you at all. There's no data, no history for them to analyze. It's not a character flaw, it's just a blank page. And that's a very different problem than having a history of missed payments.
So what does being a financial ghost actually mean for you day to day? Well, it's a huge deal. It can make it really tough to rent an apartment because landlords check credit. You might have to put down much bigger deposits for your phone or your utilities, and forget about easily getting a car loan or even a basic credit card. It puts up all these walls to things you really need.
Okay, so the goal is to stop being invisible, right? So what are we actually building? We're building a credit score. Let's pop the hood on the engine that calculates this number that's so important. Take a look at this. It might seem complicated, but it's not some big secret. This is the recipe. The biggest ingredient, a whopping 35%, is just your payment history. Do you pay your bills on time? That's it. Almost as important at 30% is how much you owe. Basically, are you maxing out your credit cards? The other smaller pieces are how long you've had credit, if you're suddenly applying for a bunch of new loans, and having a mix of different types of credit. All those pieces we just talked about, they get crunched into a single number that falls somewhere on this scale, from a low of 300 to a high of 850. Now, the magic number you're really aiming for, the threshold where lenders start to see you as a good bet, is generally 700 or higher. That's when things really start to open up. So, how do you actually start feeding that scoring engine the good stuff it needs when you're starting from zero? Well, let's focus on one of the most clever tools out there for exactly this problem, the credit builder loan. And the way it works is pretty interesting. And this is where things get kind of weird, right? A loan where you don't even get the money? What's the point of that? It sounds completely backwards. But the genius of it isn't in the money you get. It's all about the process. Let's walk through it. First, you get approved for a small loan, say $500. But instead of handing you the cash, the bank puts it into a locked savings account that you can't touch. Then, you start making monthly payments to pay off that loan. And here's the key. Every single on-time payment you make gets reported to the credit bureaus. Once you've paid it all off, boom, the bank unlocks the account and you get the $500. So let's just boil it down. This isn't really a loan for buying things. It's a system designed for one purpose, to let you prove you can make payments on time. Think of it like a forced savings account that happens to report your good behavior to the people who calculate your credit score. You're creating that all-important payment history. Okay, so that credit builder loan is a fantastic tool for sure, but it's not the only one in the toolkit. Let's zoom out a bit and compare it to some of the other options you have when you're starting from scratch. Let's break these down side by side because they each solve a slightly different problem. You've got the secured card. That's like a credit card with training wheels. You give the bank a deposit and that becomes your credit limit. It's awesome for learning good spending habits.
We just covered the credit builder loan, which is perfect if you don't have a few $100 for a deposit. Then there's becoming an authorized user. This is where you piggyback on a friend or family member's good credit, which can give you a really fast boost. And finally, you have things like lending circles, a cool community-based way where a group pools their money together. Each tool has its place.
You know, when you look at all these options, it really is like you're building a house. You can't just start throwing up walls. You need to lay a solid foundation first. And that means picking the right tools, the right building blocks for your unique situation.
All right, we've got the tools. Now for the big question. How long does this all take? It's really important to know that this isn't an overnight fix. Building good credit is a long-term play that demands some patience. And this is super important for setting your expectations. This isn't a magic trick. After about 3 to 6 months of making consistent payments, you'll likely get your very first credit score. You're officially on the map. Give it a year, maybe a year and a half of responsible use, and you'll start to see some real, meaningful improvement. And after about 2 years or more, you'll have what's considered a strong, established credit history. If there's one thing to take away about the long game, it's this: consistency is everything. It's a marathon, not a sprint. The whole system is built to reward steady, predictable, responsible behavior over a long period. Just keep making those on-time payments and don't let your balances get too high. Those 2 simple habits are the absolute keys. So let's zoom all the way out. You've done the work, you've used these tools, and you've built a good score. What's the real takeaway here? It's about so much more than just a 3-digit number. What you've really done is proven you can successfully navigate this financial system. You've built a foundation of trust, and that trust is what unlocks access, opportunity, and financial stability here in the US. That's the real prize.